Well, we have Zillow guys saying that the housing market is actually much worse than you actually think it is. Well, the question is how much worse is the housing market? Well, we're gonna jump right into that. My name is Orlando and welcome to the channel, guys. Look, this housing market is up and down, roller coasters. We're seeing so much data coming out that is saying that prices will get to an affordability level that most people can afford. Hold up.
Wait a minute. Something ain't right.
Let's see what they actually have to say. Housing market in much worse shape than Fed wants to admit, an economist says. If you guys have not been watching what the Fed has been doing, the Fed came out with some interesting talking points. They basically said that they're going to continue to raise interest rates until they destroy inflation. And what does that mean? How many rate increases does that actually take to destroy inflation? Well, your guess is as good as mine, but we have 2 more rate increases coming up this year. Who knows what that's going to be? I would guess that it's going to be somewhere around 75 basis points. The Fed seems to want to continue to be aggressive, but it says the housing market is under pressure. Data this week on new home sales and pending home sales reflect sharp drops from the last year and showed the impact higher interest rates continue to have on prospective buyers. On Wednesday, the latest report on pending home sales from the National Association of Realtors showed contracts to buy previously owned homes fell 1% from June to July and 19.9% from July 2021 to July 2022. Now, does that surprise you guys? Now, we remember back a year ago, we talk about this all the time, is that home sales were going crazy. Everybody had FOMO and was jumping on the bandwagon to buy overpriced homes. Listen, I'm sorry if you bought a house back then. It's no shame and no judgment, but most people overpaid on a house. And how do you know if you've overpaid for a house? Well, if you just go onto Zillow, Redfin, or any of those places that you go to look at homes now, look at what homes are selling around your neighborhood, down the street, what someone bought a home for now. Actually, also too, look at what houses are being cut down to. What are the big, huge price cuts that you're seeing? And a lot of people are seeing that they bought their home for $400,000. And now the home down the street is being sold for $350,000. So you lost $50,000 worth of equity in your home in just a 6-month period. Now, that sounds crazy, right? That sounds mind-boggling. Like, why would that happen? Well, that's what happens when we're leading to a recession. Or like the media is saying right now, we're in a housing recession, right? They won't say that we're in a full-blown recession because we all know that the government is waiting 18 months to actually say we're in a recession. It lags about 18 months, guys. So we have to wait, to officially say, even though we already are, guys, we're already in a recession. But that is what a lot of people are seeing right now. The pending home sales index, a measure of signed contracts on existing homes, dropped to 89.8 last month, the lowest since the start of the pandemic. Contracts declined for the 8th time in the last 9 months. Guys, are these red flags that you see to let you know where the housing market is going? The person you're watching right now, me, has been telling you month over month over month. November, a couple months after that, you have to look at these signs. And the signs are telling you right now, where are they all pointing at? Recession. Housing market going further and further and further down. And just right now, the media is really just getting onto this. And if you've been watching my videos, I know some of you guys were, kind of, I don't know if I want to sit on the sidelines and wait and to see, but look what happened. If you would have bought, just follow me out on this logic. If you would have bought 6 months ago, you would have lost 40, 50, 60, in some markets, $100,000. Imagine if you would have bought in Boise, Idaho.
Another one.
When it was super hot, 6-7 months ago, a year ago. What if you would have bought in Austin?
Another one.
A year ago. What if you would have bought somewhere in Arizona or LA or some of these other ridiculously hot markets? You would have lost $40,000, $50,000, $60,000 in equity.
Man, I'm dead.
You would have lost that already. We're seeing the price cuts. And guys, remember, values of homes are determined by comps. Comps are sales that happen in the last probably 6 months to a year. And we're seeing these price cuts happen. And what's going to happen when prices continue to drop? Well, those prices will be used to determine the value of your home. So if you try to go get a HELOC or refinance, you may be in a situation where you just have to wait 4, 5, 6, 8, how many ever years it will take to get back to that position. On Tuesday, data on new home sales in July showed sales fell 12.6% from the prior month and 29.6% from the last year, signaling demand for the housing market continues to wane as Federal Reserve continues to raise interest rates to slow inflation. And this isn't going to slow down, guys. Interest rates are going to continue to rise. We know this.
Like and subscribe.
This is not a figment of my imagination. This is not something I'm making up. We literally see the Fed say, we are going to continue to raise interest rates. And if they continue to raise interest rates, prices will drop. I mean, tell me where I'm wrong at. I know I got my critics, but tell me where I'm wrong. If you aren't seeing price drops happen in the market, if I didn't say to you guys, prices are gonna drop, if I didn't tell you guys, hey, you know what? When interest rates go up, values go down. Isn't that what's happening? It says the housing market is in much worse shape than the Fed has been willing to admit, an economist said. And then he wrote the following. He said, but policymakers have made it clear that inflation is their primary objective and housing is collateral damage. Now, what does that mean, guys? Let's read that one more time. I want to make this perfectly clear. The policymakers have made it clear that inflation is their primary objective and housing is collateral damage. That means that the Fed will do anything that they possibly can to destroy inflation. And if housing goes down with it, hey, so be it. So be it. So you understand that the Fed is not going,
oh man, we want to make sure we make the right move so that housing stays up.
They don't care about that, guys. All they care about right now is crushing inflation. And they think to themselves, hey,
Housing will come back at some time. You know, if it crashes, it's not a big deal because it's going to come back. It's a cycle.
and that is true. It is in cycle. But do you want to be caught in the cycle when it's going down? I don't want to be caught in that. I definitely don't. Mortgage rates have leveled out in the recent weeks, but the average 30-year fixed mortgage rate is 5.3%. Earlier this month, rates dropped below 5%. The sharp drop in new home sales is another clear indication that the housing market is in a recession. We've known that, guys. We've known that the housing market was going down, down, down. I mean, I don't know how many red flags you have to see to know where this is going. But let's take a look at this chart, guys. This chart is very, very interesting because this is the home buyer affordability fixed mortgage index, which shows basically the home buyer affordability for mortgages. So if you take a look at it, that it goes all the way from 1990 to 2020 and 2024, and you take a look at this and you see that the affordability was low, and then it, obviously it came up higher. And now we're all the way back down to 98.5. That's not good. Affordability is still an issue, guys. These prices are still high. And not only that, but income has not moved. That is the problem. Income and the wages that people make, it has not moved, guys.
We're in a different era. Get over it. Whoa!
So Prices of real estate are still going up. Homes are still going up. Interest rates are going up, which makes it not affordable. We always say on this channel, for every 2%, $200,000 of buying power decreases when interest rates go up. So just imagine what you could afford at 3% and what you can afford now at 5, 6, 7. It's going to get less and less buying power. And with that being said, it becomes less affordable. And we have to understand these homes are still high. So even though these price cuts are still happening, we're chopping away at what was already overpriced.
Garbage.
Remember, a $100,000 overpriced home cutting down by $20,000, $30,000, that's 30% cut. It's still gonna be $70,000 overpriced. Now, can you make that work? I don't know. It really depends. And this is the reason why it's so important that you focus on your local market. That's how real estate is. That's how housing is. You have to look at your local market. Boise, Idaho, and Detroit are two different markets. You will see two completely different things. You cannot do the same thing that you're doing in Boise versus Detroit. So make sure every day you're looking at Zillow, Redfin, wherever you go to look at your housing to determine what's your next steps, to understand what's happening. So when you do pull that trigger, to buy that home, to refinance, or to sell your home, you are informed and you have done the research on what's happening in your local market. Once again, guys, I hope you got value out of this content. I'm gonna need you to watch the next video here. It will help you understand what's going on in this crazy housing market. Also get into your first rental property. Also make sure you check in the description below. We have some useful links there, guys, our membership program, and to get your free credit report. See you on the next one. Thanks.